Hi guys, you're welcome to my commentary for the dollar and foreign currency. So today we are quickly going to go through the dollar institutional order flow on the higher time frame. I mean the monthly, the weekly and the daily time frame. And what we see here is the dollar had traded previously into a premium mitigation block with a fair value gap right there. You see that mitigation block, the failure swing with the shift of market structure right here. Price traded down into that mitigation block and the fair value gap attached to that mitigation block. So price now gave us a displacement lower and created a sell side imbalance, buy side inefficiency that the institutions traded into right above this level here. The institutions traded into that level to rebalance that inefficiency. Remember, rebalancing of inefficiency doesn't necessarily mean that the gap has to be closed completely. The gap doesn't have to be closed completely for an inefficiency to be rebalanced. So price traded into that level. Then what do we see? We see the monthly time frame created a 3-candle swing high right here, which is a reversal pattern, give us a displacement lower. Price traded back into the bearish order block, the last buy candle before the sell displacement lower. That is a bearish order block, and we are seeing that the dollar is showing willingness to go lower because it has been failing to take out the highs of the previous candles on the monthly time frame, and we see it showing bearish impulsiveness. So we like to see this guy trade lower, and if this was to trade lower, where would be the drawn liquidity on the monthly time frame? This will be the first drawn liquidity, the old low right here, you can see that, then the old low below that, the old low below that one right here, and ultimately there's a fair value gap below all of these lows. That will be the draw on liquidity on the monthly time frame. So having said that, we're going to go down to the weekly time frame. We're not going to spend much time on this analysis today, so just go to the weekly time frame. And on the weekly time frame, what are we looking at? You can see that price has been showing signs that there is weakness in the buy side price delivery. Price took out this, traded into this breaker, bearish breaker, then give us a displacement lower. You can see price has been forming lower highs. It's been forming lower highs. There is no momentum to break out all of these high, as you can see there. Okay, so it's showing us signs. The failure swings in its ability to take out the previous highs is a sign that there is weakness in the buy side price delivery, and is showing bearish impulsiveness, as you can see in the candles here. So we see that in the last 3 weeks, we see that the candles of the weekly time frames are showing willingness to go lower. And what are we looking at? I would like to see this guy trade into this level, the fair value gap that was created here. Okay, I'd like to see this guy trade into that level before we look for sell confirmations on the weekly time frame. Basically, I'm saying that I like to see the dollar do something like this before it trades into all of this level, and ultimately that level, and the fair value gap on the monthly time frame. All right, that's my expectation on the dollar. Then on the daily time frame, I'm looking at market structure. I need to see price action create bearish shift of market structure, and return into internal range before we start selling. And as you can see, price traded into the bearish order block here. 50% of that bearish order block is the order block mean threshold. So price traded into 50% of the bearish order block here, which is the order block mean threshold. Sorry, let me do it right. If you measure 50%, 50% would be somewhere around that level. So price traded into that level and created shift of market structure bearish. You can see that. Took out the high here, then gave us a shift of market structure bearish right at this level. And price has been selling. So we need to see this guy return, at least take out liquidity above that high this week, and trade into the weekly fair value gap like we see there, which will be in confluence with the bearish breaker on the daily time frame. The bearish breaker, you can see liquidity residing above here, buy side liquidity pool residing above that old high. Then there is a bearish breaker, so I'd like to see this guy create something like this, trade into this level, then give us something like this and sell into the drawn liquidity residing below all of these relative equal lows and the liquidity levels that we have outlined on the weekly and the monthly time frame. So on the 1 hour time frame, of course, what am I looking for this week? I'd like to see a gap open higher that gives me the sign that we're going to go high into that level that we've outlined on the dollar. So you can see that this week, what do we see? Yesterday was Monday, and let's see what happened on Friday or Sunday. Sunday, you see that we had a gap open higher, which tells us that we are going to go high. We are most likely going to trade higher this week. So let's see that. This was the gap open high. You see, price closed the gap, then created shift of market structure bullish. Okay, so technically what we had here was sweep on liquidity, price swept liquidity below all of this level, then created shift of market structure bullish at this level, shift of market structure bullish, and we like to buy if we see this guy returning to internal range liquidity level. So what I see here is I see liquidity residing below this low. So I would like to see price take out liquidity and trade into the bullish breaker, trade into the bullish breaker right here. So I like to see this guy trade below this guy, trade into the bullish breaker. Then once we see another shift of market structure bullish around this level right here, something like this on the 1 hour, then I'm going to buy once price returns into internal range into those levels on the daily and the weekly time frame. Okay, so we are trading a retracement into internal range this week of the weekly time frame. What we are trading is we're anticipating there's going to be a repricing into that internal range fair value gap that we see and outline on the weekly time frame, which is this level on the weekly time frame. That is what we're anticipating. All right, and how we are going to trade, that is what I'm showing you. We're looking to see this guy return into the bullish breaker of the 1 hour time frame, then give us another shift of market structure bullish, or as price returns into that level, we go down to the 15 minutes and look for shift of market structure bullish, and we buy from an internal range fair value gap or other block into the higher time frame fair value gap of the weekly time frame. Okay, so this is my anticipation for the dollar index, and you know what to do exactly. Until the dollar is ready, we are not ready to sell. We're not ready to sell Euro USD or GBP USD because the dollar is king in the foreign exchange market. So we like to wait until the dollar is ready to buy. We're not interested in executing trades on foreign currency. If you like this video, don't forget to like, follow, and subscribe to this YouTube channel for more interesting videos. And if you're interested in joining our private mentorship, myself and Solomon King, you can just check the link to our mentorship community on the description of this video. You'd see elitetradersprogram.com. You can go there, subscribe for any of our mentorship course, and you're going to have access to the private community, to weekly reviews and commentaries, and of course you are going to also have access to question and answer session and also private Zoom sessions in the mentorship community. And if you have personal questions you'd like to ask me pertaining trading, there's also a link to my private DM. Just reach out to me in the description of this video and let's have a conversation. Until next time, I wish you good luck, good trading, stay safe.